Hi everyone, hope you're all doing well. Today we're going to do a couple of news stories that are out there, and there's 3 big stock updates that I want to talk about. So I'll spend 2 or 3 minutes on each of these stories and do a bit of a roundup of what's going on out there. Hope you enjoy it. Let's get started. So as you look at the stock market today, you probably look out there and go, it's a pretty impressive day out there. The Dow is up at 0.6%, the S&P is up 1.6%, and the Nasdaq is up 2.4%. That is a cracking day. And all of it mostly goes down to this one stock lifting up the market, which is Nvidia. I'm going to keep this nice and brief because everyone's cat and dog are going to be covering this on YouTube in the next 24 hours. So I'm going to keep this nice and brief because I don't think any of you come to me for Nvidia stock, but it is up. It's just updated actually. I had this taken on the pre-market of 14%, but as you can see here, it has now opened. It is up 15%, which is a cracking day. And this is leading to not every single stock out there. It looks a little bit of a disguise because not every stock is up this much. It's Nvidia doing a lot of the heavy lifting, but because Nvidia's up and they've reported excellent numbers, is lifting other stocks, say like AMD for example, and stocks that I own like Alpha for example. Now the reported earnings, I've got to say, they were absolutely fabulous, weren't they? EPS beat by 0.52. That's absolutely insane. That's nearly a 10% beat on the EPS. Revenue up 265% year over year. 265% year over year. Beat by, this is the other thing, the beat by 1.5 billion. Like imagine beating analyst estimates by 1.5 billion. That's more alone than what most companies do in a quarter. That's absolutely insane. So yeah, the demand is definitely there for Nvidia at the moment. And you know, you look at the stock and you think it's absolutely crazy. The stock is up 61% year to date. The last year alone up 274%. And I've got to say, you know, I made the error of looking at this and thinking, look at this stock, you know, it's like a rocket ship on that stock chart. It can't do that forever. But when you do look at the numbers and you look at the EPS and you look at the revenue and then you look at what it's trading at, I mean, 35 forward times earnings, it's not bad at all. If they are going to do this year the growth that they're expecting to do and the EPS growth they're expected to do, it's actually not ridiculously overvalued. I keep seeing people mention a bubble, and I've got to say, it's only a bubble if they don't do these numbers. But at the moment they are doing the numbers, so I don't know if I can call it a bubble while they do these numbers. Now the thing is that people have to realise is that the more Nvidia grows 265% year over year, the numbers they're going to have to do then a year later to justify the growth, it is pretty impressive. We'll see if they can do it. That's the tricky thing, is that the comps are getting harder and harder, but hey, you never know. They might do it, but we'll see what happens. I'm just enjoying watching from the sidelines on this one. Don't get me wrong though, I wish I did own some shares, but I'm enjoying watching from the sidelines. Next one, the main cause of why the stock market had such a poor day yesterday, which was crazy to say. Alto Networks, that had a massive drop off its earnings, down nearly 30%, a cybersecurity company, and they had awful net earnings. The EPS was, well, not earnings wise actually, it was more the guidance. The EPS was a decent beat, revenue growth 90%, beat by 10 million. It was the outlook. The outlook was pretty poor. You can see here that they expected year over year growth in the billions of 2 to 4%, and revenue growth in between 13 to 15%. Now this company is supposed to grow 20+%. That's why the company trades at 40 times earnings. And especially when you're in a cybersecurity space and you're seeing the demand for AI, you know, cybersecurity is a hot space and you'd hope for it to be a lot better than what they're suggesting on an earnings basis, and that's why the stock had dropped. What was really annoying is that obviously the consensus were more towards 20%, and obviously now they've put out a lot lower guidance. The big thing is that this knocked on to a lot of other cybersecurity plays. So, for example, Darktrace, which is a stock that I own, that actually got massively hit off the numbers that they did. And that was a little bit annoying because they had a massive day, downwards day. I think the stock actually was down, 9%. And since then, the stock has actually nearly recovered all of the dip that it did go on. It recovered it through most of yesterday, and today it's gone a little bit higher as well. So, yeah, it was a bit frustrating to see Darktrace have a drop because of someone else's numbers, but the market has bought up the dip in it. And I've got to say, I'll let you guys know in a little bit of a secret. You guys on the page who know this, I did buy the stock, or the dip, in Darktrace yesterday. I thought this was a crazy dip in Darktrace to see this drop 10% off another company's earnings, especially when Darktrace itself came out with an update on the 11th of January and they actually hiked up their guidance, which is like, well, you can't really start knocking Darktrace because of other companies' earnings when they've been hiking up the guidance during January as well. And Darktrace as well, you know, I mean, it actually went all the way down to 40 something times earnings. It was nearly the same as Alto Networks, and it was nearly the same sort of valuation, yet this company is going to grow, what's the updated guidance again, 13 to 50, let's call it 14%, and Darktrace is forecast to grow 22% this year, and it was like, hold on, why is this getting valued the same as this, yet the financials are a lot better, and Darktrace is also hiking up the guidance. So I was like, if you're giving me a 10% drop on this stock because of someone else's earnings and this company's on fire, I'm going to buy the dip, and that's what I did, and I'm glad I did, because it has recovered a lot of that dip that was absolutely insane. And the last one is Etsy. So Etsy is a stock that I actually used to own. I'm going to refresh it here because I've not refreshed it since it opened up. So it was down 10% in pre-market. It is down about 8% at the moment now. Yeah, they had a drop off earnings. I used to own Etsy, made a little bit of money on it, saw a few things I didn't like, so I sold it off for a little bit of a smaller profit than what I wanted. And there was a lot of concerns around the analyst downgrades, and also they were cutting staff in the peak Christmas period, which is like, whoa, you don't do that during your peak time. It's like you must be having a weak trading time. And yeah, they did. They especially when you look at the guidance, Etsy's numbers had a bit of a miss on the EPS, and the guidance as well was quite worrying on Etsy. They said that the first quarter they've seen very low growth, and they estimate a decline in the low single digits year over year. They also said that they expect GMS as well, that if it stays at this pace will actually be down mid single digit decline this year, which is not what you want to see from Etsy. And yeah, the stock was down on that, and I'm not surprised to see the stock down on that. What surprised me more with Etsy is that I expected the stock to be now starting to push towards 52-week low of $58. I thought that's where we would see Etsy stock go, and especially now when you look at the numbers, we were expecting 4% revenue growth. That's probably going to be flat this year. Profit growth as well. We'll see where that ends up. But if you look at where Etsy was 6 months ago, I've gone on way back a machine here, and I've gone 6 months ago what analysts were forecasting, and they were expecting 9%, nearly 10% growth this year. And realistically, we're going to see Etsy basically flat. And I start looking at that point of view thinking, has Etsy kind of, saturated? Has it kind of reached its kind of peak now? Can Etsy go, not that much further with its product? And I thought, yeah, they're not good earnings, and I'm glad I sold, and I'm glad I spotted the warning signs and sold out and took my profit when I did, because it could have been quite a big bad situation for Etsy and for me. If I was still holding the shares, if I was still holding the shares right now and I've seen this trading update, I'd be like, hold on, I was expecting this company to grow 10% 6 months ago, and now they're going to grow 4%. And looking at the latest numbers, we could even see flat, maybe even negative growth this year. Like, yeah, the EPS might go up, but that's only because of job cuts and savings they're going to do this year. If you don't have growth, it's going to be very hard to keep dragging up that profitability. I'd be a little bit worried as an Etsy shareholder after seeing them numbers. And yeah, it's good because obviously, for me, I bought the stock, made a bit of money, saw a couple of warning signs, sold out, and I guess that's I'm going to give myself a little bit of a pat on the back, really, because sometimes you'll hear about it for the next 2 years if you don't see the warning signs and don't sell the stock. You'll hear it mentioned for the next 2 years, but obviously this one won't be one of those stocks that's mentioned for the next 2 years, because managed to cut it at the right time, I guess, really, with Etsy. So yeah, that was good overall. So yeah, just wanted to talk about Nvidia, wanted to talk about Darktrace, been buying the dip on Darktrace, which I thought was crazy, and Etsy having the poor numbers that I said it would when I sold it, and also the video that I made on Monday. Obviously, some interesting earnings tonight. Mercado Libre, we'll see what that one's going to do. Block as well. So yeah, we'll see what's going on there. Anyway, hope you enjoyed the video, guys. Hit that like button. See you in a bit.